Hi, have you been following Ashok Leyland? Their stock just jumped almost 2.6% today, hitting an intraday high of 225.3 rupees. Seems like the market really liked their Q3 results.
Wow, that's a significant jump. I did see the headlines, strongest ever Q3. They said they even turned cash positive, which is a huge deal. The share price reaction makes perfect sense now.
Absolutely. I mean, all-time high revenue and profits. That's impressive. It says here their net profit is up 31% to 762 crore rupees. And EBITDA is at 12.8%. What exactly is EBITDA again?
Well, EBITDA is basically earnings before interest, taxes, depreciation, and amortization. It's a way to see how profitable a company is from its core operations without the impact of things like debt and accounting.
Okay, that makes sense. It's like stripping away all the extra stuff to see the bare bones of profitability. And clearly, investors are impressed with those bare bones, judging by the stock's performance today.
Exactly. And Ashok Leyland's EBITDA being at 12.8% shows they're doing something right, especially considering it's their eighth consecutive quarter with double-digit percentage EBITDA. The market clearly rewards consistency.
Wow, consistent performance. The press release also mentioned all-time high Q3 revenues of 9,479 crore rupees. That's a significant jump from last year. No wonder the shares are up.
Indeed. And their export volume grew by 33%, which indicates they're expanding their global presence. This kind of growth is exactly what investors look for.
So, turning cash positive, what does that practically mean for them?
Well, it means they have more cash on hand than debt. They reported net cash of 958 crore rupees compared to a net debt of 1,747 crore rupees in Q3 FY24. This gives them more financial flexibility for investments, dividends, or weathering any future storms. It also makes them a much more attractive investment, hence the positive market response.
Speaking of investments, the chairman, Mr. Dheeraj Hinduja, mentioned they're continuing to invest in battery electric and alternate fuel products. That's forward thinking, considering the push for EVs, right?
Absolutely. They're positioning themselves for the future of transportation. And with Switch having a healthy order book, it looks like their bets are paying off.
Okay, so it's not just about hitting records, it's also about innovating. What about their market share? Did they mention anything about that?
Yeah, their domestic MHCV, medium and heavy commercial vehicle market share is still over 30%. They're also maintaining market leadership in the bus segment.
That's solid. I saw something about them launching Sathi. What's that all about?
That's their foray into the entry-level LCV, light commercial vehicle segment. Apparently, it's a new customer segment they hadn't addressed before. Expanding their reach,
Diversifying their portfolio, got it. They were also at the Bharat Mobility Global Expo, showcasing some cool stuff.
Right. They showed off an electric port terminal tractor and a 15-meter bus with a front engine and sleeper berths. Innovation on display indeed. Switch also presented an electric truck concept.
Okay, so they're active in multiple areas, future tech, product launches, and maintaining market share. Let's dive a bit deeper into the financials. I'm seeing here they filed an integrated filing related to SEBI circulars.
Yes, that's a mandatory filing. It includes unaudited financial results, statements on deviations, and disclosures on related party transactions. It's all part of keeping things transparent.
Transparent is good. So, what were the key figures from the unaudited financial results?
Well, digging into the standalone results, the income from operations was 9,436.17 crore rupees for the quarter ended December 31st, 2024. Profit for the period was 761.74 crore rupees.
And how do the consolidated results look?
On a consolidated basis, the income from operations was 11,995.21 crore rupees, and the profit for the period was 819.67 crore rupees.
So the group as a whole is performing well, with both standalone and consolidated figures showing strong profits. What about expenses? Anything noteworthy there?
Expenses have increased, but that's expected with increased operations. Cost of materials consumed is higher, and employee benefits expense is also up.
Okay, makes sense. More business, more expenses. What about other income? How did that contribute?
Other income played a role, especially in the standalone results. But the primary driver is still the core operations.
Any exceptional items affecting the profit?
Yes, there are some exceptional items, including impairment loss in the value of equity instruments and gains on fair valuation of investments.
Right, those can swing the numbers a bit. Now let's talk about those all-important financial ratios.
Absolutely. The auditors, Pricewaterhouse, conducted a review and issued a report.
What are the key ratios we should be looking at?
Well, the debt equity ratio is crucial. For the standalone results, it's 0.15.
And what does that tell us?
It means they have relatively low debt compared to equity, which is a good sign of financial stability.
Okay, low debt is good. What about the consolidated debt equity ratio?
For the consolidated results, it's 0.61, excluding the financial services segment. That's a bit higher, but still manageable.
Got it. How about the debt service coverage ratio?
The debt service coverage ratio is 7.76 for standalone and 6.13 for consolidated, excluding financial services. This shows their ability to cover debt obligations.
High coverage ratio is a plus. What else stands out?
The interest service coverage ratio is quite high, indicating they can comfortably pay their interest expenses. Also, their current ratio is around 1, showing they have enough liquid assets to cover short-term liabilities.
All right, so overall, the ratios paint a picture of a financially healthy company. What about segment-wise performance?
The group operates in two main segments: commercial vehicles and financial services. The commercial vehicle segment is the major revenue driver, but the financial services segment also contributes significantly.
Do they provide a breakdown of assets and liabilities for each segment?
Yes, they do. It shows the assets and liabilities for both the commercial vehicle and financial services segments, giving a clear picture of each segment's financial position.
Are there any significant changes in the company's structure, like mergers or acquisitions?
Yes, Hinduja Tech Limited acquired Techosum Group GmbH, which expands their technology capabilities. Also, there's a merger scheme involving Hinduja Leyland Finance Ltd and NXT Digital Limited, which is still under process.
Always something going on in the corporate world. Before we wrap up, a quick reminder. We advise investors to check with certified experts before taking any investment decisions.
Absolutely. And now, summing it all up, Ashok Leyland had a stellar Q3, achieving record profits and revenues. They've turned cash positive, are investing in future technologies, and maintaining a strong market position. No wonder their stock soared today.
It sounds like they're firing on all cylinders. Definitely a company to keep an eye on. Oh, and before we forget, if you're enjoying this discussion, don't forget to like, share, and subscribe to our channel for more insightful analysis.
Absolutely. It will really help us to produce great content. Okay, so looking ahead, what can we expect from Ashok Leyland?
Well, management seems optimistic about the CV industry's growth, citing favorable macroeconomic factors. They're focused on product premiumization and cost leadership.
And don't forget their push into alternate fuel vehicles. That could be a game changer in the long run.
Right. So overall, the outlook seems positive, driven by both current performance and future strategies.
Yes, but as always, keep an eye on market conditions and any potential risks that could impact their earnings.
Definitely. It's all about staying informed and making smart decisions. Thanks for breaking all of this down for me and for our listeners.
Anytime. Always a pleasure to dive deep into these reports.